Hello, everyone, and welcome back to another episode of the What the Finance podcast. And on today's episode, we're welcoming back Amit Kukreja, who's a serial entrepreneur and Palantir devotee. So, Amit, thanks for coming back on the podcast. I obviously didn't scare you away the first time.
No, the first time was awesome. I loved it. I love it. Thank you for having me on. I appreciate being here, and it's going to be fun to talk about the markets.
Yeah, definitely. And you've upgraded your background as well, which is good. So we have a bit more to, to look at. I think last time it was just a brick wall. But yeah, how are you holding up in these crazy times? Obviously, we've seen quite a lot of red days recently. And I think since last time, unfortunately, pounds has gone down a bit and the whole market's gone crazy.
Yeah, I mean, like it's been rough, obviously. But I also think the thing that makes it less rough is just recognizing that this is super, super natural. It's supposed to happen. I mean, S&P was 478 end of last year. Or beginning of 2022, there was no way it was gonna go to 600 or 540. Like it wasn't natural. Given if you know anything about Fed liquidity and inflation and supply chains, it just wasn't natural. So I think it is very natural that it's dropped. The foolish thing, which in hindsight is always 2020, for us to be buying while S&P was at 450, 460, thinking that was a correction. It's like, no, that wasn't a correction. Things were going to go lower, but no one's a genius unless you've been calling a bear market for the past 2 years. So you got to kind of just take the losses as you take them. And I think now I kind of agree with Morgan Stanley, which is the bottom is 3,400. It could go lower than that. Primarily because there's not a catalyst to push it above that. I was talking to a guy yesterday who's been in stocks for a while, and he says the summer is the catalyst because stocks are always good in the summer. And I'm like, like maybe, I don't know if that, but see, it just shows how absurd some of the reasoning that all of us have to try to justify this stuff. So I'm down about 40K right now, almost 30K on Palantir. And it hurts, but I wasn't going to cash it out in the next 5-6 years anyway. So I'm assuming it'll come back, and hopefully it comes back with a vengeance over the next couple of years.
Yeah, everyone has those crazy like sayings. Like I heard this one, like sell in May and go away, and then you wait till the end of the year. Like they just make up all these things and say that's what you should do.
Yeah. I mean, we'll see what happens, but I think the summer is not going to be that friendly towards us. Especially, I just don't see the catalyst for why things would get better at all. And because I don't see the catalyst, but I see all the bear market catalysts. But then again, all those catalysts could be wrong, and I could be wrong. So we'll see what happens.
Yeah, I think if you look back at like 2018 and like 2015, 2012, and even 2008, the real catalyst was the Fed. So I think if the Fed really changed their mind, they decide, okay, maybe inflation has gone down, or maybe we don't care, but we want to try and save the economy, then maybe they'll go the other way. But I don't know if you think they'll do that, or what's your opinion?
Well, they did that already, right? They did that in 2020, and now they're raising rates doing quantitative tightening because they realized, oh crap, we like inflated the economy, so we've got to stop. So it doesn't make sense for them to give another little bit of a bailout, which is what some economists have been saying, that like 2008, 2019, 2020, there was or 2018. The Fed always came in to kind of save the day, even if it wasn't as big as they did in 2020 for the pandemic. So if they're not coming again, then interest rates will go up. And unless inflation naturally goes down, there is zero catalyst for us to think that things are going to get better, which is why I haven't been buying either. I'm just like, I like Google at 2,200, but I could like Google at 1,700 too. And it's like, we'll see.
Yeah, I think at the end of the day, you don't have to get the bottom. Like as long as you get like, within 10% or something like that, you're still going to.
No, now I want the bottom. Now I want the fucking bottom. No, yeah. Now I want the bottom. I bought all the way at the top. Now I'm getting the bottom. I don't care.
Yeah. Buy all the way down.
All the way down. All the way down.
That's a challenge, isn't it? Because it's just like we've seen these companies. And I read this thing recently where it said that a company can go down in value 50% every single day, and it will never reach zero. And I guess we've seen that with Luna, it can just keep reducing in value. And I guess the company would then potentially go bankrupt. But like that's the thing that people have to realize.
Yeah, and I don't think that's happening to Palantir. They have zero debt, 2.3 billion in cash. I think they're going to be fine. I do think $3 or $4 is a possibility. I mean, if the S&P gets to 3,000, I mean, Palantir is not staying at $6 or $7 or $8, maybe, because it's been holding up pretty well over the past couple of weeks at $7-8, with Tesla going down to like 630. So we'll see what happens. But I'm not bullish at all about this market, and that's why I've been hesitant to put in more money. So we'll see.
Yeah, I think we see that there's like leaders. So I think the growth stocks were the first ones to crash, like Teladoc, Palantir, a few other ones. And now we've seen sort of the big boys who I guess, they were holding the line, and now they've dropped as well, like Tesla and Google and all those other companies.
Yeah, and Tesla's fall has been pretty bad. I mean, with everything going on with Elon, it's rough. I don't know if Tesla goes down to, let's say 300, 400 times 5, it's a $2,000 stock or whatever. It's like, I don't know, maybe 400, $500 billion market cap. It would be kind of sad to see this Tesla story fall apart. Because like what's happened in the market over the past couple of years, outside of the Fed liquidity and everything, is the story of innovation and growth, at least in the context of Tesla, which is this feel-good mission of wanting to save the planet. It came true, and it came true at astronomical levels, and it changed people's lives. And it's like, at some level, I heard Chamath Palihapitiya saying this on CNBC once. He was like, we should want the richest man in the world to be the person who's done the one of the best things for the world, right? We don't want it to be some guy who made money off oil or something. We want it to be some guy who's actually trying to save the planet, doing really good stuff. So I was always happy with Elon Musk being worth as much as I never envied it, because I was like, he deserves that. So if the Tesla story was to fall apart and it was only going to last for less than a year of being at that level at $1 trillion, and it was to go down back to $400 billion, and everyone ended up being right, like the analytical part of the world ended up being right, that the creative vision that the guy had was not going to have the capital to support that creative vision anymore, because reality hits in, and then you realize they only sell 1 million cars a year, and it were to go down, it would be kind of sad, you know, forget the financial loss. It would just be very sad to see Tesla not be the superstar that it is.
I agree. It's like that, the hope of like these companies are revolutionizing the future, and they're doing things for the better. Because you think about it, if Tesla didn't come along and, you know, do create these electric cars, there's no chance we'd be anywhere close to where we are today. None of the other companies would have done it. He took the initiative, and I think we need more people like that doing that, don't we?
Absolutely. And you know, it's like, but he decided to go after free speech. That's been his prerogative. And I'm like, all right, bro, I get it. But I'm also like, I think, I don't know, I might get some hate on this, but I think he's being very manipulative on Twitter. He's trying to take advantage of like, forget the article that came out and everything. This whole Democrat Republican thing, I think he's trying to play into the narrative. Like when he put out this tweet saying nothing will stop me for fighting you and for fighting for you and for your free speech, I was like, you sound like this savior-esque Trump type of figure, that I'm fighting for you. I'm like, bro, you're trying to like save humanity and get us to Mars. You don't need to fight for free speech. Like, why is that so relevant and important? And I understand why people think it's relevant and important, but I think ultimately the market crashed when he decided to pay 44 billion, and he's like, shit, Twitter's not worth 44 billion. Now I have to put on this charade and this show of acting as if I care that Twitter is worth that much money and I care about free speech. If Twitter said, hey, Musk, you can walk away, we'll go our separate ways, everything will be okay, I think he would be like, all right, fine, because I don't want to pay for this anymore. But this whole political thing he's doing now, I don't know. It's not exciting to be a Tesla shareholder to deal with this stuff. And there's a lot of Tesla shareholders that are very vocal right now, like Gary Black, that are really sick of this stuff. So I guess we'll see what happens.
Yeah, I don't like it, because it's like both sides, isn't it? They're both like, oh, we want to help you, we want to save you, we want to do this and that. It's like, well, it's quite, you know, it's like you're looking down on us. No, we don't need your help. Just, I don't know. That's the way I look at it sometimes. It's like, you know, just
that's
do your
the beauty
thing.
of that's the beauty of entrepreneurship, is you're neutral, right? You don't give a shit about Democrat. You just care about building cool stuff. Now, obviously, do you put your political input when something dramatic happens in the world and you like pick a side? Yes. But this is not one of those things that like, bro, the market's crashing. You don't need to worry about free speech right now. Like, people are losing their life savings in your stock because they were convinced that 800 was going to go to 1600. You know, things are rough right now. So I don't like the political games. I just wish he would just focus on building, which he is. Like, we know he's focused on building, but so it's just like the political stuff is just chatter at the end of the day.
Yeah, I think he says he spends like 5% of his time on Twitter, and the rest is like actually doing the, you know, what is it, the SpaceX, the Tesla, all the other crazy things he's doing. So it shows you like how much, but that's probably getting 90% of the attention, the stuff he's saying on Twitter.
Yeah, I don't know if it's actually 5%, because like he really he does tweet a lot. Like, I'm like, it can't literally just, I mean, maybe it's 5% of your day, but like there's moments where he's probably at the factory and just pulls up his phone and he spends a couple minutes, like all of us do, just, and then they get sucked into the rabbit hole for a couple minutes.
He's almost as much as you, man. Whenever I get on Twitter, I'm like, oh, there's like 10 more tweets I got to catch up with, Amit.
I got to do more, man. I'm trying to get to 1,000 tweets a day. I think it's possible. I've done the correlation with follower count, and I'm like, if you tweet this much, Twitter will just show your shit. It's like YouTube, right? If you just put out more, like you'll naturally get more subscribers, even if it's not like exponential growth. So, same thing with Twitter. Like, if you can get a viral tweet, like I tweeted one thing on Friday, I was like, Tesla, who's buying the dip? Shit got 1,000 likes. I was like, what the fuck? This is just some random. I was like, who's buying the dip on Tesla? And then Twitter just took it to the moon. And I'm like, well, if I can tweet 1,000 times a day, maybe I can get 5 of those a day, because I just increase my probability. And then all 5 of those go to the moon, and then you just get all those more followers. So I'm trying to hack it somehow. I think I just got to tweet a lot more.
Yeah, I think I commented on that one and got like heaps of likes. I was like, what the hell? It was just like a random comment. As you said, you just never know what will get caught in the algorithm or not. Anything about Tesla probably, or anything that, you know, GME or any of those things will probably get put all through the algorithm.
Especially at the right time. I mean, when Tesla's falling, everyone has something they want to say. So that's the thing about Twitter. It's very like, you got to be in the moment to actually tweet stuff. And sometimes I'm not in the moment. Like sometimes I don't care about tweeting, but like if something's happening in the market and you're there on the home feed, I mean, you're going to get discovered for what you're saying. So it's like, that's the nature of the product, keeps you kind of hooked into it, which is a brilliant move. It's just annoying because then you got to keep tweeting.
Yeah, I don't know. I think it's sometimes unhealthy looking at, because if you get sucked into this news and like, it just means you think it's either the end of the world or it's the best day ever. And I guess that's more a social media thing. It's probably what we as people enjoy. We like always being updated and always, being stimulated, I guess.
Yeah, and man, when you get more followers, it feels good. Yeah. I'm also a little bit of an attention whore. So like when you get followers, it feels nice. It's like, more people care about what I have to say. Even though they're all bots, according to Elon.
Yeah, I don't know about you, but I get all these random like people following me, and you're like, you're definitely a bot. But yeah. Anyway, we'll see what happens. So yeah, you mentioned there like Palantir. We'll go back to Palantir. We went on this crazy rant about Twitter and stuff, but Palantir is in a pretty good position at the moment. It's got low debt, high growth, free cash flow, which is a lot different, I guess, compared to other growth stocks. So, I look at some other companies that are in a much worse position, sort of like Roblox, Beyond Meat and Kavana. They've just got really high debt to equity or to assets and all these factors. Yet Palantir sort of gone down a similar amount. So I'm not sure if you have any thinking about why that happened. Do you think maybe it's because there's lots of retail ownership, or what's your opinion on the situation?
I just think the market and the algorithms and probably scared retailers are just, when they saw the earnings drop, the earnings was pretty good, 31% year-over-year growth. I mean, I thought it was pretty well, but Opendoor did 500% year-over-year growth, and Opendoor got crushed. So I'm like, if Opendoor like can post a profit for the first time and do 500%, like 500% year-over-year growth, and the market's still not going to reward it, then I don't think we could have done anything. So I think the sell-off, it had nothing to do with fundamentals, had nothing to do with the fact that we have no debt, 2 billion in cash flow, net dollar retention is up high. It had everything to do with the fact that no company is going to be able to justify a valuation, especially if Tesla can't do it. No company, especially if Apple can't do it. Like no companies in this market is prepared for that. And it's the thing about the market that I think you only learn when you're in it for a couple of years, which is like the days where the indexes are down, everything's down. And like, you can't find anywhere to like kind of run and put your money. And same thing when the indices are green. So the question is, what stocks are you in on the greenest of the greenest days? Because that's when the Teslas go high. That's when the, ARC innovations go really high. But on the reddest of the red days, if you're still in those stocks that get the benefit of the greens, then you're stuck in the sea of red, and you kind of have to live with it. But I think the sell-off on Palantir had nothing to do with the stock. I mean, it didn't have it didn't have like a Netflix quarter, which is like, oh my gosh, they lost all these subs. Like, what's the future of the company? That had a pretty decent quarter. The guidance wasn't amazing for the next couple quarters. I think that'll be adjusted. So I just think this market is not rewarding to any growth stocks right now.
Yeah, I think there's so much asymmetric risk. It's like if it's good earnings, it might go up a little bit, but not too much. But if it's horrible, if it's not even horrible earnings, but if it's just a little bit off, then the stock will crash. And we've seen that with Amazon and these massive companies, the trillion-dollar companies, and they're still crashing like hundreds of billions of dollars just from like a small miss of earnings. It's pretty crazy.
Yeah, and Amazon, Amazon doesn't look like their next quarter is going to be that good either. If they didn't have AWS, they would just be a retailer at the end of the day. Like literally AWS is the only thing that's saving that company. Because Prime Video is not saving it. The retail business with crappy margins is not saving it. So, and AWS, if people aren't buying as much compute because, a recession might happen, then AWS is going to get affected. So I think a lot of stocks are in for a lot of discounts that are coming up, but I do think there's going to be a lot of money to be made because buying Amazon at like $1,500 a share, knowing AWS is the leader of the market and they're going to be around a decade from now. Like my startup uses AWS and it's great. Like it's a perfect system to use. It's very simple. So we'll see what happens.
Yeah, I have heard that some startups actually they're baking in that they're going to use less of AWS because they're worried about the cash flow. I guess we were talking about before. It's like they don't want to run out of cash. So I guess that's the issue. It's like there's these companies that you wouldn't think would be affected by it, but they are because people are just preparing for the worst. And I guess that's where it becomes a spiral where everyone tries to get some cash to prepare for the risk. And then, it goes down a lot.
The interesting thing is we've never had a recession with social media. Like 2008, social media wasn't a thing yet. 2020, it was like a 2-week recession and then everything exploded. So it's like we've never had a real bear market where the whole world is talking about it. It's always been CNBC as the epicenter of like content and coverage when the recession has happened, never independent voices. And I'm just curious about two things. Number one, how does the influx of independent voices actually accentuate the nature of the discussion around a bear market? And then number two, like, can people still find ways to make money? Because the great resignation that we're seeing is all these people quitting their jobs because content and platforms like TikTok, YouTube, Instagram, they're giving people access to audiences. And once you have an audience, you can sell things, which means you can start your own business. It's interesting if the COVID effect happens where people spend less money for entertainment in traditional ways as a result of the recession. So consumer discretionary income decreases. And as a result, they go to social media for their entertainment, which is what happened during the pandemic. And as a result, people who have started businesses on social media just have more eyeballs that they could potentially attract, which means there's still like a tiny sector of the economy that's like growing and entrepreneurship is still thriving, even if there's a macro level recession. I'm very curious to see if that happens because we've never had the influx of new businesses in a recession, because in a recession, it's hard to start a new business, but with social media, it makes everything super easy. And we didn't have social media in 2008.
Yeah, it'd be super interesting. Well, if you look at like I guess Gary Vee is a good example, like in the .com bubble in like the early, 1999, 2000, I think that's when he was using like Google AdWords. And, if you think about 2008, that's sort of when I guess it continued to grow, but obviously YouTube came into play and there's all these other marketing avenues as well. And you think about Airbnb, that was a company who really grew from 2008. So I think that's, as you mentioned, there's going to be lots of innovation and these companies are going to take advantage of, other companies going bankrupt, and they might be the only ones to be able to prosper.
Yeah, I think the startups that are going to survive are the startups that are going to be able to still have a chance. But I'm also just curious about like the person who sells wigs on Shopify. Like it's going to be harder for people to buy wigs because they have less discretionary income. But if you have more people online willing to like see your wig content, which leads to more conversions, maybe you can still sustain a business even in a recession. So it'll be super interesting just because we've never had social media with like a global recession, like the heights of 2008. And do we get to 2008 levels? I don't know. I kind of think it's not going to happen because I think the economy, the labor market is very strong, and it would be very odd for us to have 11 million open jobs, but for the world to be panicking about a recession. So it might just be like a Wall Street recession where stocks suck, but hopefully that doesn't affect actual people in their lives because, that would be bad for everybody.
Yeah, well, I think if inflation goes down, then most people would be pretty happy with where they are at the moment, I'd say. Most people are employed, economy is going quite well. The only thing is, as you mentioned, stocks going down. But if you think about the last 15 years, most people have been pretty rewarded if they're in the stock market. So I guess it's time for a little bit of balance between capital and actual like labor.
Right. Agreed. 100%.
Yeah, definitely. So, I know forecasting can be, it's a bit of a fool's game going into the future. You mentioned that you're thinking 2 and 3 years, hopefully we've recovered and it's all going to be okay. Do you have anything else that you think will happen in the future? I guess, are there any mega trends that you're watching? Obviously you're quite into, social media and you have your own platform, but focused on trying to get people's attention through audio. What other mega trends do you think could be interesting and maybe people might want to invest in if they agree with what you're saying?
Well, so it's interesting because I think technology obviously is the thing that everyone wants to invest in because we believe that technology is going to change the world, which is why companies like Palantir, Teladoc, Roku, Roblox, they're exciting to us because it makes sense. It's like these companies, of course, they're going to change things and alter behaviors and be different and all this stuff. So it's like in general, if you've done that over the past 10 years as a technology investor, you've done well. Now the question is that going to happen in the next decade? And I see no reason why it wouldn't. I see a once in a lifetime Fed liquidity, artificial inflation, supply chain problem, COVID pandemic event that happened that put a halt to all of that stuff, accelerated a lot of stuff at artificial levels and inflated levels. But now it's coming crashing back down. But there's no reason it doesn't continue. It's not like people are going to stop using video games in a virtual world 300 million times a month or whatever for Roblox. Like that's just not going to stop. So it's like same thing with data AI. If none of this stuff is going to stop, then there's no reason to panic about the investments. So I think in general that's a trend that is going to continue, and we will be right on the individual. We'll be right about the trend. The individual stocks that win, it'll ultimately come to fruition. Number 2, audio. As you can tell, I have a startup that's in the audio space. I think audio is a fundamentally underrated medium of content, and I think with the podcasting world, it's starting to get more and more less underrated. The problem though in the podcasting world is the discovery of audio. So we know audio content matters. We know people can listen to it. They can multitask. They can consume stuff that changes the way they view the world. It's like the blogging revolution in the 2000s where everyone was able to communicate via words and then monetize that. Now people are doing that via their voice. And the video revolution kind of happened in 2010, and that's going to continue because video is still king. So if companies can exist, whether they're startups or big players that can actually democratize people's ability to make a living off their audio, which means getting discovered, not getting people to subscribe to your podcast, but getting people to listen to it in the first place. then I think audio is going to be a big trend as well. And I think the final thing is streaming. I'm like, I don't, this is the thing where like, I don't know. I'm very bullish on user generated content. And to me, user generated content comes in the form of people posting to a technology platform and the platform algorithmically curating so that people can consume the content they want. Netflix, HBO, those are not those types of platforms. They're media companies at the end of the day. They're not even tech companies to me. They've built a decent platform, but anyone can build a platform. Like the question is the content good on that platform? So I don't know. I think maybe streaming has hit a peak and we're going to see if people actually care about this premium, amazing type of content.
It'll be interesting because if you think about it, like those, you mentioned those companies there, they have so much sunk costs that they have to try and recuperate. And if they're not constantly producing, they're constantly growing, then people might unsubscribe because there's so much content out there. And you look at YouTube or any of those other platforms, they really don't have to spend anything to get people to post on their platforms. It might be a little bit to help some creators, but there's not really that much help, is there?
It's the greatest business model in the world. It's like, hey, there's this thing called the worldwide internet that's connecting only 4.6 billion people now. There's going to be another 2-3 billion with Starlink 60. Like over the next decade, there's going to be at least 7 billion people on the internet. Here's this website where anyone can just type it in, access it, and you can put something on that website, and the website has really good backend servers and algorithms to get other people to see the thing that you're posting. And the value of the website, the platform, exponentially increases. But what people forget is that the value to the individual user also exponentially increases because of the nature of network effects. And then you can even make money off of it. And you can be in any part of the world and get people to know who you are. Like, it is the greatest opportunity, I think, that exists in the history of the planet. And that's why the business model is fundamentally superior than anything else. Because for Netflix, for these streaming companies, you've got to make the content, and then you've got to get people to actually care about the content. With YouTube, Instagram, Twitter, you just let people post, and then algorithms do all the work. So
they spend all the money. We spend all the money buying the equipment and then trying to make the content so we can get more exposure. But one thing I heard that was really interesting, apparently 70% of YouTube viewers don't watch it in English, which I found really interesting. So that's like, if you look at Mr. Beast, he has like lots of different channels in all these different languages. So that could be another opportunity for people to get exposure if they're, I don't know, if they're dubbing it in other languages, or probably, if they're speaking other languages, that would be quite impressive. But I think that's another opportunity that people might be missing out on, because a lot of us focus on the English world rather than, majority of the rest of the world who speak other languages.
Yeah, it's a good point. And the problem is Mr. Beast, and I know he does spend a lot of money on like hiring good voice actors to be able to dub his stuff. And most people don't have those resources. But yeah, I mean, there's so much of the world. I mean, India, I think, is YouTube's biggest market. They have about 440 million, I think, DAUs on that platform. I mean, like India. And if you think America creates a lot of content, or the Western world, the amount of Bollywood movies / soap operas that are created in India, it's like insane. And they're all getting distribution through YouTube. So, I mean, like, it's just a behemoth. It's such a big behemoth. But when you have such a big behemoth, I think there are market opportunities in which that big behemoth can't necessarily capitalize on. So, for example, there's like this website that's like a physics YouTube, where it's basically YouTube, but only for physics. So that makes sense because YouTube is very crowded. You can find physics related content, but if you want hyper specific physics knowledge, you could go to the physics YouTube and then get your content there. So content is a commodity. The platform that gives discovery to the people that are posting that content on that platform is good, but there's also market opportunities for people to just specifically do their own type of content in one place outside of the behemoths that exist, but still using the behemoths to drive traffic. Just like me, I have a website called Palantir, dailypalantir.com. I use Twitter to drive traffic, but at the end of the day, dailypalantir.com is my own source of like people, viewing my content. So it's the greatest time to be alive, though. And I think the Netflix streaming business models, they're going to suffer. Just given the nature that people can't post anything on Netflix, and nor should they. Netflix is not for user generated content, but that means YouTube is probably going to win long term.
Yeah. I think that's the thing. It's like, there's so much horrible content on YouTube, but there's so much great content as well. Whereas on Netflix, there's only so much they can produce. So if they get a few, stinkers, then that could really pull down the actual system. Whereas YouTube doesn't care. They'll just post anything as long as it's not violent or dangerous or anything.
I've been observing the YouTube algorithm and really trying to understand how they recommend things, because my platform is an audio version of what YouTube is trying to do. It's a search-based discovery mechanism for audio, and we are developing our algorithm right now. And I'm just like, is there some magic secret that YouTube uses? I'm like, is there, like, I've been literally just scrolling through the homepage, seeing what it recommends me, and it's very simple. I watched the video on Bill Gurley yesterday. He was one of the first checks into Uber, and I just got more videos about Bill Gurley. I'm like, well, this is pretty kind of simple. They index the word Bill and Gurley. girly, and they found more videos that have that same word and they showed it to me. And it's just like, at one point you just realize, wait a second, the algorithm's not even that crazy. It's a question of which platform has the content, because Netflix can't show me anything if I search Bill Gurley. They can't, because they don't have any content on Bill. But like YouTube, just by the very nature that they have all of this content, they can just keep feeding you a lecture by Bill Gurley, a keynote by Bill Gurley, a documentary on Bill Gurley, Bill Gurley's like 17,000 CNBC interviews. And then I'm hooked, and then I'm constantly there. Same thing with Twitter. Same thing with TikTok. So it's just like, if you can get people to post on your platform, you can then index and make a very reasonable recommendation engine that can over time get exponentially better. But getting people to post is the biggest thing. And YouTube has convinced the world to post. So
yeah, and I guess the challenge is once you grow, it's actually regulating it to make sure there's nothing illegal or anything. That, I guess that's probably where, them and Facebook's where a lot of their money goes now.
Yeah, I mean, YouTube, I think they paid $4 billion a couple of years ago to the record labels. So I mean, they pay out a lot of money to content partners, but they never have to rely on them. Like if the record labels decide to leave YouTube, YouTube be like, all right, like people won't listen to music anymore, but they're gonna have a lot of other stuff to do on YouTube. That's why when Joe Rogan left, they were like, all right, peace. Yeah. So you're Spotify's problem now.
Yeah, I think that's why maybe Spotify will be interesting though, because I feel like music is different. Like it's not something where there's going to be like a war like Netflix or Amazon. Like no one really wants to only have like certain musicians on a platform. People want to have the option for everything, because music is that thing that you just, maybe you don't know what you want to listen to, or you want to discover new things. So I think that's, puts Spotify in a pretty interesting position. I'm looking at Spotify. I think it could be I've got all these companies in my head that I'm watching, and I think that's an important thing. You're watching these companies and you continue to do research. And then from there, once you either, see some news or you see a price you like, then you can sort of invest.
I think Spotify has a packaging problem. I listened to Gustav, who's the head of R&D there, and he was basically saying, well, first of all, for the audience to understand, Spotify is in a horrible business because music is not proprietary, meaning every, 80 cents off a stream, it goes back to the record labels or whatever number it is. But Spotify realized a couple of years ago, they're not making money off music. So it's like, how do they make money? They have all this attention. How do they monetize it? So they went into podcasting, and they decided to create this kind of Netflix of podcast style of business where they can just acquire premium content, because that gives them top of the funnel brand awareness to then create pricing power on their $10 subscription. And so they're now trying to become this home of podcasts. The only issue is, and Gustav literally said this on the podcast, he said that their AI and machine learning has become so advanced that someone can upload a 3-hour podcast and they can transcribe it and they can find the best 5-minute segment out of that 3-hour podcast. That's how advanced their AI is. The problem, he said, was how do we show it to the user? And this is not a small problem. Like the AI ML, it's a big problem, and they solved it, and that's amazing. But packaging content to users is one of the most difficult things in the world. And the reason it's difficult is because TikToks, there are some TikToks that have 800,000 views on them, literally. And then on YouTube Shorts, they have 8. And it's like, what's happening? Why is there an 800,000% increase on one platform over the other? And you realize, well, the nature of how the platform is showing the content, recommending the content, and ultimately packaging the content is important. When I go to YouTube, the first thing I don't get is these random videos. I get thumbnails and titles. And I tried YouTube Shorts yesterday. I hated it. And I'm like, why do I hate this, but I love TikTok? I'm like, what's the difference here? And the main difference was YouTube Shorts is not meant to recommend these types of funny trends kind of videos. It's just not meant for that. It's meant for thumbnails and titles. It's meant for, okay, I'm eating a meal. I want to click something and just watch it while I'm eating. That's not what TikTok is for, obviously. So I think the problem Spotify has is people are going there for music. 79% of people don't even listen to podcasts on Spotify. And then on top of the music that they're going for, you're now shoving this premium podcast that you spent millions of dollars to get onto the platform to get them to use it. So where is the potential for you to show that 3-minute, 5-minute type of AI machine learning clip to the user? Because ultimately, if you don't show it to the user and there's not a natural way the user discovers it, that user will never get the benefit of listening to all the AI machine learning stuff that your engineers were able to come up with. And I think that's a bit of a pickle. I don't know if they're going to be able to solve that problem. We will see, but I think that's the challenge they have right now.
Yeah, and I guess that's the issue. They don't want to be like that annoying spam text that sort of pushes people away, the customers away. So it's to find that balance between recommending stuff and not. Because I guess with audio as well, a lot of people, they don't have their phone open, they don't have their screen on. So how do you get someone to press on something or to watch something without them actually seeing it?
Very difficult. It's very, very difficult. And then also, how do you get people to use, a lot of people just want it for music. So how do you not annoy those musicians? If I'm using Spotify for 80% music, Spotify can't mess up my home feed experience by putting in all this junk, because I'm gonna be I'm just going to Apple. This is stupid. Why are you doing this? YouTube has a different idea though. YouTube is they're not a music thing. They're not they're just a feed of content. And so even if you use YouTube for 80% of music while you're scrolling, there's a chance some guy talking about real estate pops up because you searched about real estate and stuff, and then boom, you're in a real estate rabbit hole. And like now YouTube has more data on videos they can recommend to you. That method of discovery is so unbelievably vital and crucial. I think it's like 95% of the content journey that I think Spotify doesn't really have figured out yet. So we'll see if they can.
Yeah. And it's really interesting when you're looking at, I guess, companies investing as well. It's like, what is their network effect and what is their moat and how can they, is there a potential for them to progress to the point where they're either profitable or they, a winner take all scenario. I think that's really important to look out for, actually understanding their business model and what are the key aspects of it.
I agree 100%.
Yeah, perfect. So you mentioned something before, your other startup, Palantir, Daily Palantir, sorry. So where you're mentioning sort of all the content and all the information being released about Palantir. So what are the main things that you think people should be focusing on about Palantir at the moment?
I think people should be primarily concerned about, well, so when most people are down a lot of money, right? And I think when you're down a lot of money, now it's a question of your conviction. Now it's a question of, are you going to sell? Are you going to leave? Are you going to like stick with it? Let's say stocks rebound massively, but Palantir only gets up to like $11. It really didn't have a big rebound. Like how do you struggle with your thesis? And I think what I'm trying to do right now, I was actually typing up a bunch of articles before we got on this, is like go deeper into the company and like not just the management and the leadership and the vision, but the actual stuff they're building. And so I've been stalking the website all weekend, just looking at different case studies and things like that, because this is the time where people are looking to trusted sources of information that can deepen their conviction in a world in which they have no reason to deepen their conviction because they're looking at a sea of red. So I think people who are checking out dailypalantir.com or just are learning about Palantir in general need to remember why the company was created, what the purpose of the company is for, and why they invested in the first place. And I invested because I thought, like my simple answer was, when I saw their technology being used in blockchain and AI and meta constellation, I looked at their list and there were literally like 50 different use cases for Foundry and Gotham. And I was like, wait a second, like, do I trust enough in the leadership and the management to think that they are not able to execute a massive amount of permeating this software throughout the world if the case studies that I'm looking at are saying that this software is saving so much time, efficiency, money, energy, et cetera? And I was like, I think they're going to be able to do it. And that's why I ultimately invested. And then as I got deeper and deeper into the tech, I was like, wait a second, they've actually differentiated their technology from every other service. Now they have a sales problem. They have an execution problem because their DNA is not sales. Their DNA is product. But I think investors right now should be looking for information about why did I invest and how can I deepen my conviction in the actual company? Because if you can deepen your conviction in DCA when it's $6-7, it's like buying Amazon in 2001 when it was $6. And obviously that worked out really well. Is this the next Amazon? I don't know. But they tell us they're going to be what AWS was last decade. So it's like, why are they saying that? Are they BSing or are they true? And if they're true, and if I buy more, am I going to get fucking rich in the next 10 years? So I guess we'll see.
Yeah, definitely. Can you provide any of those insights that you've been writing about? Maybe some snippets of...
Well, so one of the, I'll actually go to my drafts right now. One of the things I've wanted to do is step up the level of article output. I think over the past couple of weeks, I just haven't been able to put as much time and effort because obviously I have my other startup and that's a whole nother issue of just time and effort I have to put into that. So I've been getting some more free time. So I want to put out about 10 articles a day. I know that sounds kind of crazy, but you're going to see this week how much output I'm able to get out there. So the couple of articles I have right now is Palantir introduces usage-based pricing, which is phenomenal because they're now letting companies not always buy the whole suite of Foundry. They can pay as they go, which is what AWS does, which is why it's so amazing. Another one is some unique facts exposed about Palantir CEO. We just had an expose come out about him. Apparently the dude doesn't know how to drive, which is interesting. So I wanted to cover that. Palantir's role in the metaverse. I'm talking about artificial intelligence. I have here are the best Palantir related Twitter accounts to follow. I'm just going to put a bunch of accounts people can follow on Twitter. Another one is understanding Palantir's path to GAAP profitability. So I'm going to talk about how stock-based compensation went down 26% and how that's getting them closer to actually being profitable. And then just a couple of other things about the SPACs and understanding the relationship with Japan and the UK. And, for me as a journalist, I guess it's a question of going so deep into the granular stuff that I have 3 minutes of substance to be able to write an article about. And that's the challenge, is going deeper, deeper, and deeper. But there's just so much news. I mean, you can legitimately do 10 articles a day for the next couple months because they just keep putting out more and more news for people to cover. So hopefully we'll be able to do that.
Yeah, I guess my concern, like I like the company and the vision, and I think there's so many inefficient, there's so many of these massive, I guess, old companies and, governments, you could say as well, and institutions that are so inefficient and that need so much help, just analyzing all the data that they've collected, that companies like this are going to be vital, where people can actually understand what the data they have and how they can improve efficiencies so that they can actually just survive as a business. But are there any competitors, I guess? And, is there anything that other people should be concerned about? Because I guess that's my one thing. How is it different to other companies? That's my one concern.
Yeah, I mean, so the main form of difference is this concept that they've created around ontology. And ontology in general is this idea of centralizing data inside of an organization and using a layer of abstraction above the pure data itself to be able to truly understand what the state of being is of the data, what the purposes of the data, how do we generate more business intelligence from it. Now, Palantir has created a pretty unique, differentiated way of doing this. Other companies are doing it, but they use particular forms of AI and machine learning that took them a lot of years to develop to be able to do this at a granular level, at a meaningful level. And that's what really differentiates them, along with their focus on helping governments and some other parts. So, I mean, I think they absolutely have a moat, and I think they're absolutely differentiated from a lot of the existing competitors like Databricks, Datadog, Snowflake, et cetera. But from a SaaS business perspective, they don't really have the sales force necessary to execute. I mean, you look at Snowflake, they spent $156 million on sales and marketing, way more than they spent on product development last quarter. And that's why they're growing 100% year over year. Now, Palantir wants to pat themselves in the back and be like, we don't need to do what Snowflake's doing because our product is just so much better. And companies will come to us. I think they're starting to recognize that's not necessarily how it's going to work. I mean, it may work like that when they really get some inflection, but to get to that inflection, they've got to go and do sales. And that's why they just hired the recent Salesforce former executive as one of their VP of sales. I'm going to cover that as well. And so I think they're recognizing, look, sales are important. Product is great. Philosophy is great, but we got to get people to actually know what the hell we're selling. And that's the biggest risk to Palantir. And I think it's an asymmetrical risk because if they figure that out, they explode. But if they don't figure that out, or if they figure it out at a very slow pace, then it's not going to be the Tesla of data that we think it can become. And hopefully if they figure out how to sell, then it can be.
Yeah, I guess that's a risk because they're so ingrained in these government companies. Maybe they're resting their laurels a bit, like oh, no matter what, we have these government contracts to sort of help us out. They don't really have to grow that much, do they?
Yes.
I don't know if you think that's an issue.
Well, yeah, and the government growth hasn't been. The government growth was only 16% last quarter, so it's significantly slowed down. I think they're telling us to expect more volatility in governmental growth given what's happening in Russia and Ukraine. We'll see if that ends up happening. But I think they know what they're doing. I think they have a game plan. I think they're going to be able to execute. I think the stock price sucks because all of us are down a lot of money. And if the stock price wasn't in the gutter, we wouldn't even have this kind of bearish sentiment over the company, just like a lot of other companies. So I think on the next bull market, which might take another 18 months to get to, we'll be fine. But in the meantime, we get to all enjoy being down every day on Twitter, which is why people should follow me on Twitter.
Exactly. Get the update, second by second updates about what is happening. I think one thing I saw as well is that, and you mentioned it, that they've given away a lot of free sort of software and product to the people like Ukraine and a lot of those countries in Eastern Europe. Is that correct? To sort of just help them in the short term, and they're expecting to get compensated for, I guess, in the long term.
Yeah, the idea is, look, in their times of needs, we're not going to negotiate a sales contract. We'll give them what they need, and eventually, we'll prove our value, which I think they're going to be able to do. And it's just such a mystery because it's like they say the government business is so big. The question is, can they capture it? And it's like, of course they can capture it, but is there something we're missing in terms of how they're able to capture this like $60 billion TAM they think exists for the government? So, I mean, we'll see. It's going to be a long journey. It is definitely a long-term hold to see what happens. But I think if it starts accelerating the growth of adoption in Europe in particular, which is what they've seen, they literally just named their newest product Gotham Europa. Gotham is their government business. They named it Gotham Europa. And it has nothing to do with Europe. Europa is like a Jupiter moon. And Palantir always wants to be esoteric with their names. But all of the quotes on the landing page were from European intelligence agencies and directors of those agencies. So I'm like, they obviously called it Europa to penetrate Europe, right? Like it just is branding to me. So we'll see.
Yeah, I think Palantir is based on Lord of the Rings, isn't it? So I love those crazy names from these random places. I guess my last question, Alex Karp, you mentioned, is it so he can't drive? He doesn't drive himself around.
He does not drive himself around, and apparently that expose was really interesting. He doesn't drive himself around. He's not married. He works out of a bunch of Palantir offices. He does cross-country skiing, lives in New Hampshire. He's not, what I said in my piece was that he's not a typical technology CEO. I just watched Showtime's Uber Super Pumped. I don't know if you watched that. It's like a documentary on Uber. And Travis Kalanick was like hardcore tech CEO, like just like ruthless. And I think Alex Karp is ruthless, but he's not like the typical frat boy type of ruthless. He's much more calm. He's much more relaxed. He studies Nietzsche and German philosophy. Like, so I think if there was anyone who was going to make Palantir a Tesla of data, it would be him. I don't think anyone else can do it. I don't think anyone else can craft the vision and do that. Like, I know what it feels like to sell someone on a vision because I'm raising money for my startup. And like, if anyone else tried to sell the vision that I was selling, they would sound like an idiot. They just don't know how to craft it. And same thing with Karp. I mean, like, there's only one guy that can really get the world to believe in what they're doing. And so my 2,176 shares are in his hands, and we'll see if his non-driving capabilities are able to drive up the stock price.
Yeah, I'm not sure. I just think it's too much of a philosopher. And for me, like, you probably have it as well. There's some thoughts where you think about the world, you think about the economy, you think about inflation, all these things, but there's some things that people might not like you saying. So you don't say them just, to be careful. And I think for someone like him, and maybe you could say Elon Musk as well, they don't really, they're so philosophical, they're so in their beliefs that they actually just say what they think. And I think sometimes that can, it can be too much. Are you concerned about that maybe is too philosophical and not enough of a practitioner?
Not really, because I think he's a practitioner for sure. I mean, like the piece I just read on him says like he's taking meetings all day and he's working out of all Palantir. Like, I don't think he's sitting around just reading philosophy all day. I think this is where I relate to him, because when you're trying to build a company that's competing with the biggest technology companies in the world, which is something that I'm trying to do, we're competing with some of the biggest audio companies that exist. You only win with storytelling. You do not win with some type of unique go-to-market strategy. Now, is that important and is that necessary? Yes, 1,000. The analytical portion of crafting a vision is incredibly important. But to get people to care originally, you've got to tell a story that's different than what exists. And he in particular has crafted a very, very unique story, and him only. I mean, the entire company, as I was reading that piece, is crafted in Karp's image. Like, since 2016, when he started doing a lot of public interviews, he's been the voice of the philosophy that has permeated the company. Now, the sales strategy has to match that philosophy, and that's out of his control. That's like, okay, we need to hire a VP of sales or a president of sales that can really like dig into the nitty gritty of how we do this. But getting people to care is what his job is. And I think he's been doing that very well. And I think they've been executing very well, growing 31% year over year. And getting people to care is the most important thing. I just think that if he continues to get people to care and they can work in the granular elements of getting the business to actually sell in a meaningful way, then they win. But I don't think he's the type of individual that is not going to get people to care by acting more formal, because that's not going to get Palantir to be what Palantir is. You need both, but one of them is incredibly crucial. And I think the philosophy really matters.
Yeah, well, I think the pay as you use, like system that you mentioned before, that they're implementing will be vital, because there's been this massive barrier to entry. So if they reduce that barrier to entry, maybe potential startups or just smaller companies, they don't have to be multi-billion-dollar companies. It could be million-dollar companies that can still use their software and actually benefit from it.
Yeah, and that's the last thing that's the crazy part, because like pay as you go is so obvious. They should have done it before. So I'm like, okay, that makes sense. Why isn't the philosopher realizing that makes sense? And it's like, is he caught up too much in his philosophy? I'm like, maybe, but I'm also like, without the philosophy, no one would care about buying Palantir as pay as you go. Like, you need both things, and I think we're just hoping that eventually both things start to reach a level where they're symbiotic with each other, where they both mesh really well in a meaningful way. And that's when you've got product market fit, I guess, from a stock. You have stock market fit, like the stock market recognizes that this stock is finally in its prime era. And we'll see if it happens.
Yeah, because most of their growth will probably be from these companies actually growing from using the system. Like you see AWS, that's really, these companies grow and become bigger. They're paying more, and that's really where a lot of the growth comes from, isn't it?
I agree.
Yeah, perfect. Amit, thanks so much for coming back on the podcast for a second time. I'll have to do a third time, not too distant future. So what is one message, I guess, you want people to take away from what we've talked about? We talked about like a crazy amount of random topics.
The last time you asked me this question, I said some motivated by mortality. I said something philosophical at the end.
Yeah. I want to rap or something like one of your I've been loving those intros in Money Talks. If anyone hasn't watched it, they'll have to watch it, because you get it really like get the rhythm going, and I'm like, damn, this is you're showing everyone up.
Yeah, it's fun. It's fun in the morning doing those shows. I guess my last message would be, first, follow me on Twitter @AmitIsInvesting. That's the first thing. Second of all, I'll just use this as a plug myself because Palantir is in the gutter. So why would we care about Palantir? I have a startup coming out, and it's going to be launching around June 15th. People are going to be able to see it. So if you follow me on Twitter, you'll be able to know when the startup goes live. And we're doing crowdfund. People can invest in the startup. I know it's hard to ask people about money in this market, but if you have capital, you're listening to this, and you're willing to put some capital in a private deal that could potentially do really well, it could also go to crap, or it could do really well over the next 10 years. Then definitely follow me on Twitter and you'll get updates about that. So I guess the philosophical narrative there is that even when the world is burning, don't be afraid to go for your dreams, because at one point you're going to have to do it. And if it's not now, then delaying it doesn't necessarily help. So just go all in, go try to do it, figure it out, and see where life takes you, and have fun on the journey.
Yeah. And I talked to someone called Chris Volk, and he recently said that the best returns you could ever get is from a startup or from a business that either you own or that you've invested in, because you can potentially get 100,000 times returns. Not always, and I guess that's the risk. That's why you get it, because there's the massive risk, but it's best return on investment a lot of the time. Yep. So look it up. It's a good platform. I use it myself. If you want to listen to the podcast there, you can listen to it, or other platforms. So Amit, thanks again. And you mentioned Twitter and all the other platforms. Is there anywhere else? YouTube? I'll put it in there as well. So are those the main places?
Twitter and YouTube is great. I would appreciate if people follow me on Twitter. Hopefully you guys enjoy the content. And yeah, I'm happy for being here again. I'm happy to see your podcast grow over time. It's a great podcast. So it's going to be fun watching you grow. I think you, me, and a bunch of us, we're all part of this little Twitter community that talks back and forth every day. And I appreciate having that community. So it's awesome to just see you in my home feed every day. And it'll be fun to see how things grow.
Yeah, definitely. I definitely spend too much time on there. Should be studying and doing other stuff. Actually producing.
Same with me.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.